Welcome to the Palantir 3030 Club. My name is Adam Bergman, and I'm going to talk a little bit about Palantir. All of us investors or potential investors of Palantir ask ourselves a very basic question at one point and or another time in our investing journey with Palantir. And that question is, excuse my language, what the actual fudge does Palantir do? We've all asked this question, and in theory, if you're watching this video, you probably dug deep, did your own due diligence, did your own research, and figured out exactly what Palantir does. On this channel, a lot of times I tell people Palantir is an enterprise builder, it is an empire builder, and it is just that simple for me. Today, there was a tweet that came out from Chad. Actually, the tweet came out 2 days ago, but I'm going to read it for you right now. Chad is a forward development engineer. He's one of those people that is set up for your company when you hire Palantir to set you up and give you literally white glove service and a custom fit of Palantir software for your company. It's not a general one size fits all. This is not a snapback cap. This is a fitted cap specifically for your business. And there was a question from possibly a hater that Arnie actually shared, which I'll show you in just a moment. And Chad responded to what Palantir actually does. What is the secret sauce of Palantir? And I thought today's video would be absolutely amazing for all of the people that are invested, potentially investing, or maybe just leaving the Palantir community because they don't know or don't know enough about Palantir and what Palantir exactly does. At the end of the day, Palantir is a leader in so many different industries, literally taking over the defense industry when it comes to software, literally taking over the healthcare industry, and is a strong contender in many other industries, literally a front runner in artificial intelligence. Most people think Palantir came out of nowhere in the last 3 years or so, but in reality, Palantir has been around for over 2 decades, kicking ass and taking names, but it was obscure. Most people did not know about it. But now it's a massive $40 billion company, and it's literally in the limelight, doing over 150% growth last year. And definitely, I think it's going to do a double up this year. That's why we're part of the Palantir 3030 Club, 30% revenue and $30 a share. And I love this company. If this is something that you like, sit back, relax. I'm going to show you the screen in just a moment, but don't go anywhere because I have 2 segments in this show. The first segment is covering this tweet, and the second segment is going to go over an options play and options strategy. I've been adding a segment for options, specifically selling options, both cash secured puts and covered calls. And I've been adding this segment in all of my recent videos, and we'll continue to add this segment in these videos. In today's segment, I'm going to be talking about a cash secured put, a Tesla play that I spoke about on Friday that actually got assigned early over the weekend. And I'm actually down and out, having to buy Tesla at $257.50 when the current price of Tesla is under $220, but that's okay. I will show you how to get out of a play even though you're underwater to start with. If this is something that you like, take a look at this screen. But before I do that, please hit me up with a like, a share, a comment, a subscribe. It helps me with the almighty YouTube algorithm. And if you missed last video, the video link is going to be up above my head right now. Please enjoy that at a later time after this specific video. Take a look at the screen and the tweet. This is a tweet by Arnie. Shout out to Arnie. If you guys are not following him, at Arnie_Trezzi. He has an amazing Substack that comes out once a week. He's really, really good with the charts. An OG of the Palantir community. Shout out to him. This guy, MT at Mimdal67, I don't know who he is. I don't know how big his channel is, whatever. And he put out a tweet 11/1/2024. I guess he's from Europe, which is actually January 11th, 2024. Because the company is a non-scalable software contractor with no in-house technology edge. Exercise for you, explain what Palantir does. So Arnie says, is long Palantir equals short arrogance of SaaS engineers. So you have this gentleman right here that says, I don't know what Palantir does, yet I see new contracts monthly. Then whatever it does, they are doing good. Seriously, if someone can explain to me the product of Palantir without buzzwords, it will be helpful. Shout out to him for asking. And shout out to this man right here. This is something that I covered before, that Palantir employees have been absolute studs lately. Shout out to Mr. Chad Wallach. This is his screen name at CMWAHLQU. He has only 800 followers. Guys, listen to me very, very carefully. This guy is one of the head forward deployed architects. He's the one that sets Palantir up like a custom fit for your company. If you're invested in Palantir, but you're not listening to this guy, something is wrong with your Abdullah Mandagala. So definitely follow him. So Chad, stud, says, we've got tools that go way beyond your typical data lake house mesh setup, though we handle that basic stuff too. So when he says we handle that basic stuff, I believe that this typical data lake house mesh setup is essentially what Snowflake, Datadog, Databricks does, plus a little bit more than the basics. And then Palantir comes in and does what Palantir does, which she's going to explain to in just a moment. And the goal of Palantir is to be able to pick up more of these, though we handle that basic stuff too. That's the problem. We're scaling down, not up, while those companies are scaling up. Our average contract is over $1 million, by far exceeding any other software company on average per client. And we need to be able to get to the large businesses and the mid-sized businesses and the small businesses, which are all multi-million-dollar businesses. They're not like tiny mom and pops. But that's neither here or there. I'm just saying that this is the potential right here for Palantir's growth in the future. Our tools drive operations to make decisions that actually matter for your business. That's a key word. Our tools drive operations to make decisions that actually matter for your business. And then he gives you an example, all right? Take this example. I see loads of folks wasting time and cash on cloud data strategies just to dump everything in one scalable spot. Great, you did it. But what now? Your report speeds up a bit in a cloud data warehouse. Big deal. So what cloud does, if you guys are unfamiliar, it takes a shit ton of data that before you were not able to have, and you store it somewhere, and you pay for cloud storage. This is what allows us to have bigger businesses, bigger applications, bigger offerings, and essentially our entire tech industry runs on the cloud. There's 3 main cloud providers, Microsoft, Google, and Amazon, followed by IBM, I believe, number 4. This is a very, very big deal, and I'll explain to you why this is a very, very big deal in just a moment. So just remember, don't go anywhere. Remember cloud data strategies, and remember Google, Microsoft, Amazon, and IBM in just a moment. So he's saying that congratulations, you're able to store on the cloud and you're able to a little bit speed up your business because now all your data is in one point and you don't need to use Excel or like Word or PowerPoint. You know exactly where to look. You have a single point of truth, right? In theory. But what do you do with the data? And this is where the secret sauce of Palantir comes in. Operationalizing your data means crafting workflows, applications, and tools that spur action to boost business outcome. It's about linking business domains and running simultaneously to see the impact of changes across your operation. That's what we're running scenarios through the ontology. Say you switch to a new raw material for a product. Our tools let you assess the effects on purchasing, procurement, logistics, and downstream impacts on yield, COGS, and supply chains right down to the customer. Everything A to Z. This is truly a single point of truth, but it's not a single point of truth beforehand where you just have your data. It's a finalized single point of truth where you actually have useful data extracted and utilized from the initial data dump on the clouds. And remember, don't go anywhere. I'm going to talk about the clouds in just a moment. We're talking about evolving from tunnel vision focus on one aspect to a connected global optimization. You need tools for connection, creating business processing, workflows, alerting users, automating decisions, and turning those decisions into actions. And to do it at scale of a Fortune 50 company, that's a top 50 company in the world, with 75 ERPs in real time. If you're unfamiliar with what an ERP stands for, it stands for Enterprise Resource Planning. So this is planning your resources for your entire enterprise. I know it sounds, maybe basic, but it's not so basic to do. It's extremely difficult. And instead of concentrating on literally the data that's in front of you, Palantir allows you to connect all the data, utilization, and all the data needed to literally transform your business from beginning to end. He then goes on to say, I get it. It's not always straightforward. And yeah, we've got some quirky names for our stuff. But in the end, it's about closing the loop from operations to optimization, coordination, and actionable decisions through our tool. It's a very, very, very strong statement. At the end, it's about closing the loop, right? So figuring out a solution between operations to optimization, coordination, and actionable decisions through our tools. Remember our tools, remember cloud, and remember Microsoft, Google, Amazon, and IBM. Got questions? Fire away. I'm here to clarify. What an absolute stud Chad is, and he broke it down. So then this gentleman right here, Ina Malvado says, Chad, first, thank you. I really appreciate it. Now let's say I have a chain store and I collect tons of data. And let's say the data is from multiple domains, like I collect data about customers, behaviors, financial data, including track of the innovations, inventories, and product quality data. So then he goes into it and he breaks it down again. Absolute stud Chad is. We've consistently achieved end-to-end traceability, covering not just one product, but also its financial journey. The concept behind ontology, remember? I literally explained that his explanation here is literally talking about ontology, where it gives you very many different situations. Ontology is literally a digital twin, essentially a metaverse, where you can practice to see what can happen, what will happen, what if, and different strategies if there are complications. The concept behind ontology is to construct a digital twin that accurately reflects reality rather than just fitting data into a convenient structure for reporting purposes. That is the difference. This is the literal difference between Palantir and everybody else. The ontology allows you to construct a digital twin that accurately reflects reality. That's in actuality, not just in theory, some data. It lets you actually see what's about to happen. Imagine being able to take a product from the shelf, look at its batch code, and immediately know everything about the specific batch, the origin of the raw material, the production yield, the personnel involved, the supply chain path, the transportation costs, and more. We map out the entire life cycle of a product, capturing every single detail. And this is going to be very, very interesting because he starts going a little bit about LLMs, large language models, which is all the rage in generative AI. Hence, Palantir AIP, which is absolutely smashing it with boot camps. Our tools, like Vertex, are designed for this. They help map out these scenarios and use process mining to uncover opportunities. With the addition of AIP logic, we can add reasoning from LLMs, KLLMs, which is multiple LLMs as per Shyam Sankar, that can leverage tools like forecasting models to create advanced solutions and scale. Stay tuned. Video showing some of the AIP logic and machine learning models coming soon. Your questions are appreciated, and I think you inspired me to make a public demo on product batch traceability. We'll start cooking. Thank you so much, Chad, for your services. And if you guys don't follow him now, make sure to follow him at CMWAHLQU. Now, remember that I mentioned the cloud services. Remember, I mentioned Palantir. So there's 3 main cloud services. Okay. Palantir is partnering with Microsoft. So you can use Palantir on Microsoft Azure, Microsoft Cloud, enabling faster deployments with Microsoft. And we got this announcement, I believe, last year. Organizations around the world will be able to make their data more actionable by using Palantir's platforms for data-driven operations and decision-making powered by Azure's cloud, scale, analytics, and comprehensive AI services. Check this out. Palantir and AWS, optimized for AWS. Wow, that's interesting. The first and second largest cloud providers. We're excited to be working with Palantir to make this suite of tools available on AWS and help our customers get the insights faster, unlocking the data they already have using AWS, Palantir's ERP, that word ERP again. Suite can help customers offload the complexities, gain faster intelligence from their data, and make critical decisions to save time and expenses. And boom, look at that. Palantir is partnering with Google Cloud, supercharging Palantir Foundry for better enterprise data management. And I quote, this is together the best AI, which Google clearly represents, and enabling our customers to turn their data into decisions and those decisions into sustainable, competitive advantages. And then there's even one for IBM right here, Palantir for IBM, Google Cloud Pack for data. But most people don't really care about that. And we just care about the big three, Microsoft, Amazon, and Google, which is interesting because Microsoft is a $3 trillion company. Google is close to a $2 trillion company. And you have Amazon, which is well north of $1 trillion. A total combined $5 trillion plus. Three of the largest companies in the world are literally using Palantir or allowing their customers to use Palantir. What's interesting, you might say, is, Adam, that's interesting. How is Palantir working with all of them? Because Palantir is cloud agnostic. It doesn't favor one specific cloud, which is very interesting. Because most people, once you're on a cloud, you're super scared to move because most of the services offered on the cloud is by the cloud provider. When it comes to Palantir, this is not the case. If you move from Microsoft to AWS or AWS to Google, so on and so forth, you can still work with Palantir. This is not just Palantir Foundry or Palantir AIP. This is Palantir specifically tools and apps for the cloud services that I just mentioned. This is above and beyond just literally having Palantir Foundry or stacking Palantir Foundry and Palantir AIP. Guys, the possibilities are endless for Palantir. If you are still avoiding Palantir, if you are still ignorant and just hate on Palantir, that's on you. But I think that's a little bit of a schmuck move. And I suggest you do your own due diligence and definitely do your own research. None of this is financial advice. This is purely entertainment and education. I think Palantir is going to hit $30 this year. I truly do believe it. Welcome to Palantir's 30/30 Club. With that said, I'm going to ask you for a comment, like, share, and subscribe down below. It does help me with the almighty YouTube algorithm. Also, if you want to support the channel, it's $3 a month. I have channel membership down below. I'm about to talk about options and what I believe for channel members because I have been neglecting them. Thank you for your support. I will start to do weekly, once a week. I'm not sure what day. Probably at night, and I'm going to have it set up that I will be doing a Q&A. I would like to focus on options, but we could talk about whatever you guys want. I'll probably do it for an hour long, and it's going to be once a week, and that's a way for me to give back to my channel members. If you want to become a channel member, it's $3 down below. It's literally super cheap. I think it's the cheapest channel membership there is, and you will be getting something in return for the channel membership, and it helps me grow my channel. Also, I'll be adding some merchandise down below, which I didn't really mess with, and they're all going to be custom designs. I think you guys are going to be very happy. Take a look at the screen. I want to talk about options. So in the last couple of videos, I covered what selling options are, what buying options are. I prefer to be a seller of options, which means that I am a bank, and the premiums that you pay when you buy a put or when you buy a call, I collect because I'm selling that call or I am selling that put. If you are selling a call, you own 100 shares of a stock and you are selling the option for somebody else to buy your shares at a later date at a certain price called the strike price. And for this, you are collecting a premium. If you are selling a cash secured put, you don't own the shares. You are putting up cash to secure the put, hence the cash secured put, saying that you will buy the shares of a certain stock at a particular price called the strike price at a later date if the price hits that certain strike price. If you guys are really clueless about what I'm saying, just watch my last couple of videos. I promise you, you will get a shit ton of data that most people are charging an arm and a leg for, and it's absolutely 100% free. On Friday's video, I spoke about managing a cash secured put for Tesla, where I have 5 open contracts, where I am saying that I'm going to buy 500 shares of Tesla at $257.50, although the current price of Tesla is under $220. I am underwater in that play. Over the weekend, I literally got called on this because I'm in the money. Even though my contract didn't expire until Friday next week, if you're in the money, you have the obligation to buy if somebody calls in that debt, essentially. Somebody called in their debt, I have to buy. So I ended up buying 200 shares of Tesla, and I'm automatically underwater because I paid $257.50, but the shares of Tesla are worth like $220. So I think I'm down like $14,000, $15,000 right off the bat. I am going to show you what I'm going to be doing to manage this position. And it happens. It's all part of the game. Who would have thought that the Houthi rebels are attacking ships and supply chain for Tesla is going to be, thrown back in Germany for 1 month? Who would have thought? They absolutely screwed me, these freaking rejects. And I'm happy that America finally got involved. Take a look at the screen. This is my account right here. By the way, year to date is not looking too good. We're down $70,000 year to date. Really, really bad. This account was over 600,000 and now it's at 530,000. That's neither here or there. I just wanted to complain a little bit. So if I go a little bit lower on Friday's video, as you can see right here, I have 3 contracts. On Friday's video, I had 5 of these contracts, and the contract is quite simple. I am saying that I'm willing to buy Tesla at $257.50, and I have an expiration date of January 19th. January 19th expires next Friday. And I keep rolling this every single week. This specific play has garnished me around $9,000 so far. How did it garnish me $9,000? Let me show you. If I go down to Tesla history, you could see that I collected $300 here. I collected $685 here. That's about $1,000. I collected $875 here. Let's call it $1,900. $2,200 over here. Let's call that $4,100. Another $1,500 over here. Let's call that $5,600, and another $1,900 here. Let's call it like $7,500 or so. It's not quite $10,000, $9,000, but I have other positions that I'm doing this as well, which I'm combining. So let's just talk about this specifically. So I am approximately $7,500, $8,000 in premiums. So let me show you what just happened. If I now go to my positions, I own 200 shares of Tesla. Now, these got assigned literally on the weekend. If you go to my notifications, you see it right here. It happened last night. I was a little bit tight. It says that you bought 200 shares of Tesla. This happened last night at 12:05 a.m. I was really, really tight because this is a $51,500 debit. So I had to pay $51,500. The problem is I paid $51,500, but as you can see right here, it's only worth $43,000, which means that I'm actually down automatically $7,700 or 15%. Why? Because I paid $257.50 and the share price right now is only at $219. But as I mentioned, I collected around the same amount in premium, so I'm actually not underwater if you take into account the premium that I collected. Hence why I love covered calls and cash secured puts, because you keep collecting the premium. So in reality, although it says I'm 15% down, I just showed you that I am actually even on this play. But to show you what I'm going to do is on Monday, I'm going to literally click trade options, and now I'm going to start a wheel strategy, which means if you get called on a cash secured put, you then put in a covered call on the shares that you own. Since I own 200 shares, I can now do 2 contracts of a covered call. Let's say I want to do it for this 19th. I'm going to break a rule here, but I'm just going to explain something. In theory, you always want to sell for at least how much you bought. So in theory, I want to do this contract right here, which is a $257.50 contract. In reality, sorry, I want to press sell. $257.50 right here. In reality, there is a 98.5% chance that this is not going to happen in my favor. So it's probably not going to hit $257.50 this week. So I'm not going to do this one. But if I did click on this and I press continue, since I have 2 contracts, I would literally collect $20. Now I have around a $50,000 position here. To collect $20 is whack. I'm not going to do that shit. So in reality, I'm going to pick something closer to the strike price. Now the strike price, unfortunately, is really, really low. So on Monday, I'm going to hope that Tesla actually pops up. Are we open on Monday? Monday or Tuesday? I don't know if we're open on Monday, Martin Luther King Day. So I want the share price of Tesla to pop up, but I'm definitely not going to be selling at 220. I'm definitely not going to be doing 222. I'm probably going to be somewhere around 240s. All right. I'm probably going to be somewhere around 240s because I don't actually want to sell my shares. I actually don't want to sell my shares. I just want to collect the premium. Maybe I'll do this, 235. If you click on 235, I'm going to have a 90% chance that I'm going to win. 90.5% chance, which means that Tesla's not going to hit 235 this week. For this, I would collect 68 cents. I'll press continue. I have 2 contracts. So I would be collecting $135 in premium for doing this contract. And I would be collecting this every single week until finally the price of Tesla starts going up. And then I could keep going up and up on my strike prices, collecting more premium. But let me show you something really fast. So I would be collecting very little premium there because I don't want to really sell the shares. I want to make my money back, right? I don't want to sell my shares. But I wouldn't be doing, 240. I would probably end up doing something like this, maybe 232, maybe something like that. Probably I'm going to do something like this, where I'm going to collect 92 cents per share or around $200 for the 2 contracts. But let's say the price of Tesla, right? Let's just say, for argument's sake, the price of Tesla would be $255. Let's say Tesla keeps going up, 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 up. Well, then this would not say share price 219. This would say share price 250 or 255, whatever, closer to the price that I bought. Then I would be selling covered calls closer to the strike price because I would be more aggressive because now I'm making money if I sell the shares. At the end of the day, you don't want to sell for less than you bought. So if I were to click this one or this one, for example, this would get me around $800 and this one would get me around $650 or $850 and $650 approximately. And that's what I would collect weekly until Tesla actually, I would have to sell my shares. Guys, at the end of the day, I've been doing this for a while. I don't really get nervous. If you're a new person starting out selling covered calls and cash secured puts, I can understand how this can frighten you and how you can get finicky. And obviously it sucks that I spent $50,000 and buying shares of Tesla for $257.50 instead of $219. But at the end of the day, I'm not down on this play because I've been collecting premiums for the last 6 weeks, which I showed you proof of. Obviously, there's a little bit of macro conditions. There's a little bit of luck and timing when it comes to this game. If this were to happen in the first week or two, yeah, I'll be underwater. But because it happened 6 or 7 weeks out from December 18th, then yeah, I'm not really underwater 6 weeks out, right? I'm not really underwater because at the end of the day, I collected the premiums, which offset how much I would be underwater. So net, I am actually even right now on this play. At the end of the day, you need to pick the right stocks. I wouldn't do this with some bullshit stock. I really like doing Tesla. I really like doing Palantir. And I believe that Tesla is going to be closer to 300 than closer to 200 by the end of the year. At the end of the day, this bullshit that happened with the Houthis attacking all these ships and we're bombing them, we're going to obliterate these fools. But who would have thought supply chain would have been thrown off by 1 month? It's not going to get back on track until mid-February for Tesla. And this, brought the price of Tesla down amongst other things, not just that, but definitely that did not help me at all. Or Hertz is selling 20,000 Tesla vehicles. At the end of the day, you need to have the skills to manage a position, even if you are underwater, and you'll be okay at the end of the day. Guys, thank you very, very much. Please continue to ask me questions and I will answer them. One more thing. Somebody asked me, Adam, what happens? I had a comment. What happens with the wash rule? The wash rule, when you close a contract and then you roll it to another one, technically you're closing one and opening one. So it gets pushed on the next contract. Essentially, you can't take your losses because you need to wait 31 days before the new contract, contract. So you can't sell a Tesla contract and open up a new Tesla contract for tax purposes. You don't get the write-off. It gets pushed on to the new contract until you're finally done with the play, and then the taxes are figured out. But they're all short-term capital gains, the premiums and everything like that. If you get out of a contract and you're underwater, then you can deduct that if you wait 31 days before starting a new contract. Guys, thank you very much. Please like, share, and subscribe, and do yourself a favor and watch this video right here next. It's jam-packed with a lot of information. Thank you very, very much. And if you want to support the channel membership is $3 a month. Have a great weekend.